so welcome to Game Plan Sunday. Today is July 25th, 2021. Had a pretty interesting week in the markets. The prior week I was out, so a lot to catch up on, but for the most part, nothing has changed. And I definitely want to give a huge shout out to you guys on the website that's been manning the chat room. Here on the website, you guys can see in the little bottom little button right there. That's our live chat room, 24/7. It's open. Get in there. It's free for all of our members, so definitely join if you haven't joined today. Make sure you do that. All right, so just coming off of the past week in the markets, we had a lot of different events that was popping off. The markets ended up doing pretty good. Okay, just ending this week, what we had here was the Nasdaq that led as far as the indices. The Nasdaq was up 2.84%. Bitcoin was up 2.30%. Had a nice little try to rally back situation there in Bitcoin. The Russell 2000 up 2.15%. SPX, which is S&P 500, up 1.96. Oil, excuse me. You know what? Is that right? That is right. Okay. No, I thought oil was actually, you know what? Yeah, that was kind of down. Anyway, so oil 1.41%, the Dow 1.08%, the dollar was up 0.21%, gold was down negative 0.57%. So overall, everything was green except for gold. So there you have it. Gold was not having this week. But when we actually peel back the sectors came back. Communication sector led the way at 3.26%. So lots of movement in the communication sector. The consumer discretionary sector was up 2.95%. Lots of movement there. The technology sector, XLK, 2.81%. And the healthcare sector had a nice boom at 2.22%. Energy and utilities were down. Okay. And so just going through our news feed, see if I can find some juicy things that was happening off here for you guys. This week kicking off, we did have the Bitcoin live situation with Cathy Woods, Jack Dorsey, and Elon Musk. Of course, they got to come in to pump up Bitcoin. We were in the chat room just getting off in there. I believe Ron had brought it to our attention like, yo, Cathy Wood is live. And I must say, because in the chat room, we get it in. I'm telling you, we're very mischievous in the chat room. Like, you guys can get in the chat room down here and just get in there with us. You can see how we living out there, right? All day, every day. Cathy Woods, if y'all don't know who Cathy Wood is, she's a female hedge fund manager. She runs the fund ARK investment, ARKK. And so she's running a lot of money, but she's super woo-woo, okay? I don't know if you know what woo-woo means, but she just, be into like some spiritual stuff, you know what I'm saying? So it's really, really weird. And so we have, crack a couple of jokes, but I did see your man's, what's his name, Maverick, had a little picture of her looking like a witch. And I was like dying laughing because we be talking about that in our chat room. We call her like a witch or so, because she's like woo woo. Like, I don't know what her trading plan is. She just buys stuff that she like, you know what I'm saying? But hey, she's on top. So anyway, so we got all kind of names for Mama Cathy or whatever y'all want to call it. But anyway, her, Jack Dorsey, and Elon Musk is pumping up Bitcoin this week. Bitcoin, definitely needs a lifeline. So the timing was perfect. I mean, when you guys take a look at the chart on Bitcoin, which I'll go ahead and bring us there. So you just take a look at Bitcoin falling beneath these major key moving averages. Here we go. So you go to Bitcoin futures right here, falling underneath these major key moving averages here. When you saw it, boom, come down, boom, and then start to trade under it. Well, and we talked about this 2 weeks ago. I was like, oh, Bitcoin is in trouble. Okay, Bitcoin is in trouble because it's under this 200 moving average. That's a key level of support that it broke through, and you guys saw it do that kind of move. And so when you see it, when it does something like this, it breaks the confidence. I mean, this type of stuff happened with all kind of stocks, right? You see it, even with the major indices, with the S&P 500, all that, right? And it's kind of like, yo, we got to bring in somebody to get this thing back popping. You feel me? Like, this is just the way it works. So once you crack this right here, like, it just kind of like knocked the wind out of you. You know what I'm saying? So traders, investors, they start to just kind of give up hope. They're like, oh man, we got to look forward to this 20,000, level here. But then you had Miss Cathy Woods, and you had Jack Dorsey, and you had Elon Musk pumping up, talking all great things to get people back in Bitcoin. Now, mind you, Elon Musk is the same guy who's been wrecking Bitcoin, right? And it's just amazing that one guy has so much power over the movement of, security, which is crazy to me. And to me, it doesn't make it nothing that I would want to put my money in if this guy, who's pretty bipolar, one day he's in love, one day he's out of love, and what he says is what goes. Hell no, that is not anything I want to be a part of. But as you guys can see, Bitcoin is getting a nice little uplift from that situation with all that pumping going on. So, we'll see, it's still trading under those key moving averages. So, I don't think that this is a buy to dip moment until you clear those moving averages. And you can see that happen when it comes up like that, and then it gets rejected, and then it actually goes where it should be going at in the first down place, which is about 20,000. So, again, you may get a little short-term boost in here, but I don't see it going much higher until it can break through those key levels of resistance. All right. So that was that on the whole Bitcoin situation. And interesting thing here, there's an article here talking about transitory. Peter Schiff wrote that. The Zero Hedge posted it. I haven't even read that, but I already know, the whole situation because the Fed's talking. Fed's, these past 2 weeks been doing these video conferences and basically trying to tell the markets that, hey, it's transitory. Same thing. Ain't nothing changed. The narrative is still the same. So transitory inflation. Now, what's interesting is that at first it was no inflation, then inflation came, then the narratives changed to it being transitory. And most people never even heard the term transitory. I heard this one guy ask Powell, like, what is transitory? Like, I never heard that term. And this is on the Financial News Network, right? He's like, what is transitory? Like, what does that mean? And, he's trying to explain to him, like, it is a short term, a temporary phase, basically. And so now the inflation is supposed to be transitory, meaning that everybody's been expecting the inflation to go down by now, but that's not happening. So now the narrative is that, and it's going to be a little longer transitory phase than what we originally thought it was going to be. And so I imagine that's what Peter is going to be talking about in this article here. Anyway, it's there for you guys to check out. I haven't read it myself yet, but it's there on the site for you guys. But that's the normal talk track of anybody, the inflationists, if you will. We got deflationists and inflationists, people that understand the inflation and deflation dynamics here. What we're seeing is stagflation, which is putting the Federal Reserve in a very awkward position. There's a couple of key events that you guys need to notice coming up. In particular, we got the FOMC minutes meeting this week. That's actually coming up as well. That's going to be in the calendar here for you guys. So I'll show you guys that here. If you see when you're on the website, the upcoming events here, you guys can see all the upcoming events. And it just gives you a couple of dates. But if you actually go to view calendar, you can see all the events that are coming down the pipeline. So let's just go there. All right. And so, of course, you guys can see Game Plan Sundays on the website. When we're live, it'll be here. Okay. And so you can check out the list view, or you can go to a monthly view. I like to go down to monthly view so I can see everything in one scope. But you guys can see here go the major events that's coming up this week on the calendar, right? So you got the new residential sales on Monday, preliminary U.S. imports for consumption of steel products. Tuesday, you got the advanced report on durable goods. Okay, you got the metropolitan area employment and unemployment on the 28th. And then you have quarterly data series on business employment dynamics on the 28th as well. And then we got the FOMC minutes meeting. That's what I was just telling you guys about. Normally when these are taking place live and when they release, we cover them in the chat room. So we're talking about it. We're all seeing, how the markets is digesting it, and what ways is the markets taking what's happening from these minutes meetings. And then we post the findings on the website and the news feed as well. And you guys can see that coming down the pipeline. While I'm here, I might as well go ahead and just cover the rest. Advanced economic indicators report, the international trade, retail trade, wholesale trade. That's coming out on the 28th. So 28th is going to be a busy day. The 30th employment cost index for the second quarter, 2021. And then basically on the end of this month here, we got the U.S. debt limit expiration. So that's another key thing. The debt expiration, this is going to be, the talk of the week of what's happening with this. And so you guys can see that here. And if you click on it, let's see what it says. This is on the calendar. It says our nation risks another self-inflicted wound when the debt limit suspension expires on July 31st. Allowing expiration exposes the nation to emergencies, harm our public credit and financial stability, and does not solve the federal government's long-term budget problems. Now, I don't believe that the government is going to allow it to expire. So to me, the only logical conclusion is that they're going to extend it or whatever they have to do to prevent this expiration. So I don't foresee anything negative coming from that. I just think that the Fed is going to kick it in high gear, or the government professionals going to kick in everything in high gear to make sure everything is good. So to me, that doesn't mean anything actually. And my man Daniel Lacal, he said it since 1960, the United States Congress has raised the debt ceiling 78 times. The debt ceiling has never been reduced. Here you go. Let's see if we can pull up the chart. So there's a chart that follows it. Okay. And it shows you this whole debt ceiling thing. They never reduce it. It just continuously go up, go up, go up. So it's always kicking the can down the road. And this is, all the financial craziness that we have going on since the creation of the Federal Reserve, where they're able to print all this money that the governments can spend. I just don't see no end in sight. So again, it's just the only logical conclusion on this here. Anyhow, taking a look here at the unemployment numbers here, we really haven't covered much of them because it's been actually doing pretty good. And but we're starting to see the unemployment numbers go in the wrong direction here slightly. It's not bad. OK, we can take a look at here. The initial claims at 419. OK, 419,000 there. And I believe they were expecting like 300 and something, like 386,000 or something like that. But it ended up going up to like 419. So that was the wrong direction. And they ended up revising the previous weeks up higher. That's why a lot of these numbers, they be wrong anyway. They just headlines. So they can get the headline news out and participants in the market can go ahead and do what they do. And the next week you get a revised number like, oh, those numbers were wrong. And the markets don't correct off of that because, it's already baked in, right? Whatever manipulation they got going on to keep the markets under this spell here, that's what they're going to do. But anyway, oddly enough, you guys can see here is that we kind of like floored out down here at the bottom. And now we're starting to uptick going higher. And that's not good considering, all this stimulus and the whole idea that we have a lot of things that's expiring this month and next month, right? We got rent moratoriums that's coming to an end. So it's going to be interesting to see people get kicked out on the streets. I don't even believe they're going to allow that to happen, but we'll see. But, with that being said, since we got our little emoji pop off and Topeezy ain't here, in the spirit of Topeezy, I'm going to drop some popcorn in there for you guys because, hey, I'm here for the show. All right. So we'll see how this all plays out. We got over 20 states that's cut this extended unemployment, and they're believing that people were going to go back to work. However, we're not seeing people go back to work. We're actually seeing more people filing unemployment, and nobody seems to know why. Very interesting development here. So these are things that we're going to have to see if this trend continues to go the wrong direction. If it goes, we're in trouble if that happens. Okay. Definitely the feds are, because as we was talking about before, when you have all this government stimulus and it's actually not stimulating the economy, that tells you right there that it don't work. So there's nothing that the government could do to solve this. And all the thing they're going to do is keep on spitting money at the problem. And it's never going to fix it. So you end up having like a stagnating economy. You get stuck, kind of like how Japan's economy is. And speaking of Japan, you got the Olympic situation going on. And I haven't even kept up with it, to be honest. When I was a kid, Olympics used to be a big thing. I don't know what's going on these days. But, I'm pro-American, so I'm always like, okay, go ahead, America, y'all win it. So just as long as the Americans get the medals, I'm good with that. But if we don't, it's cool. But we got situations with this whole COVID situation pop off, right? So the first wave of COVID that was light work, now they cooked up another variant, the Delta variant. And this Delta variant is supposed to be, you know, a little more powerful. Okay. And what's interesting is that the markets, it seemed as if the markets has been anticipating this whole move with this Delta situation, anticipating that the economy is going to go back to recession and go back to a slowdown or lockdown. And that you don't want. And in fact, I saw a doctor, a report on Yahoo Finance who's talking about people going to the games and Japan and how they shouldn't allow people to go. And in fact, they shouldn't even have the Olympics. And then it was also saying how people shouldn't be going to Florida. Okay, because I guess the cases are picking up down there. It's a hot vacation spot. You got to understand, Ben, I used to live in New York. We call Florida the promised land. All right. Because, in New York it's cold. So most older people they retire, they move down to Florida. Okay. Tired of the cold. They made their money in the cold. They're moving down to Florida. So you have a lot of Yankees that's down in Florida, a lot of people that moved there. And some of them actually have, a vacation home there. So they spend their summers down in Florida. They come back to New York for the rest of the year. But, it doesn't amaze me that Florida is supposed to be peaking high, especially when you have a lot of New Yorkers. And again, that's where the whole pandemic pops off at a place like New York. You know what I'm saying? It's just a huge infested, you know what I mean? So it's crazy. But anyway, we're seeing that, take place right now. And the market is a future forecasting mechanism. It's trying to move ahead of what it can see. Everybody's trying to get all the data insights that they can. And, you got to make a move. You got to take some risks. You may be wrong or you may be right. So anyway, what we're seeing is, and especially in the bond markets, that it was looking like they're kind of pricing in another recession or some kind of economic slowdown. And to me, the Delta variant seems to be the thing that could be the catalyst for that. So we have to keep our eyes on that, see these COVID cases numbers go up higher and the news pick it up and start to scare everybody all over again. Again, that could be some of the reasons why, people are, filing unemployment or not going to work. Don't really know yet. So these are things that's happening in real time. We got to check that out. And just here we go. Just talking about those yields, the handy dandy yield curve here. I got my rangefinder out to 10 years so you guys can kind of see this, these little things here a little better. Okay. All right. So this is where we are right now. I just want to pay attention to the blue, which is the 10-year, and the gray, which is the 3-month short term. Okay. So you guys can see in the past, boom, traded the floor. All right. Those are under Obama years. Here go Trump years. Boom, they raised the rates. Trump wasn't happy about that. We ended up getting the crash right here. Bloop. Rates came all the way down to the floor again. Okay. And we're still down here as the Fed suppressed this. Okay. So the Fed suppressing the short term, long term. This is the bond vigilantes out here. And when this goes up, it's actually showing that they're forecasting the economy to go up basically. But when they have it go down, it's kind of like forecasting the economy to go down. So we're seeing that in real time there. And what I'll do here, and again, this is on the website too. You guys just type it in, the yield curve. You guys can check that out. So we'll go to 2 years. So you guys can see this here. So this is what's been happening. Bond prices have been going up. Bond yields have been going down. Just pay attention to the 10. That trend has been going down. Very interesting, because who the hell is buying bonds? All right. Very, very tricky situation, because inflation is hot. And inflation is outweighing whatever interest that you can get off of bonds. So you'll be negative basically. But these participants, I guess, believe that they can move at a more accelerated rate than inflation. I'm not too sure. It's just weird, because why would you give the government your money? Okay. Why would you pay them so that they can borrow money from you? That don't even make any sense. Okay. We're talking about negative interest rates, real negative interest rates here. So that whole narrative don't make any sense, but the markets will make a liar out of you every time. So I told you guys, my mentor said to me, do you want to make money or do you want to be right? Okay. That is a crazy situation to be in. Like, do you want to be right or you want to make money? Most people say, I want to make money. So we're seeing all this kind of stuff take place on the economic front. I could be right, but on the money side, I could be losing money. So then you got to pick and choose, you know? And so that's one of those things. I have an economic understanding and that forecast could be right, but the markets will make a lie out of you. At the end of the day, it don't matter. You know, the markets are irrational. So even if the markets don't make sense at the end of the day, if that's what they're pushing, those are going to be the numbers of print and you want to be in the right position. So that's when we've seen situations like how gold is just totally underperforming. I'll just take a look at gold real quick. All right. So you guys can see gold, you know, you see the action here, right? The trend is going down. Okay. We told you guys that inflation was going to be a damn problem, and it is. So we were right. But you see, the money ain't moving the way it need to be moving. You feel me? So gold moving a little sideways and to downward. Not good. It's an inflationary environment. Gold should be, but it's not. So you have to adjust. Okay. You have to adjust to what is working. Now, that can be problematic also because when people capitulate, then you get those crazy reversal pops that kind of vindicate your position, but you ain't in that position no more. So it depends if you got them diamond hands, okay, we're talking about them diamond hands in the room, or you got them WPA hands, you feel me? Yeah, you seeing those WP hands, right? So you got the weak hands or you got the diamond hands. Can you hold on it, right? Overall, gold should be much, much higher, okay? And in reality, gold is higher. This is the paper markets, so you can't trust the paper markets, okay? Gold itself, real gold, physical gold, it should be much higher. Still hard to get your delivery, still hard to get your hands on it. Always trust the supply and demand over the manipulation that you have in the markets. So anyway, I'm all down for physical, but paper, it's a different story, okay? Here go a bigger time frame for you guys right here, Ron. If I can get that thing to move, there we go. All right, so this right here was off a bigger time frame, okay? So that's what I was saying here. You got those, it's going in that direction. So, you know, but we'll see. We'll see. The biggest thing here for gold is just to hold this 100, okay? And it may continue to chop and it may suppress. You know, you can see these kind of moves happen. They'll chop in this range. And boom, as soon as they hit that 100, they make that nice blast off, okay? We'll see how that plays out. And in fact, from the Fed's meeting this week, we might get a move from gold, depending on what the Feds are going to be talking about. Lots of speculation about the Feds talking about tapering up the mortgage-backed securities. We'll see, you know, how that plays out. Here goes a couple of headlines here on the news feed that you guys can check out. Right here, Fed's mortgage-backed securities buying high on agenda as officials begin taper talk. Okay, so they put all these headlines out about the Feds going to be tapering, but I don't think the Feds can. Powell just hasn't seemed to even be talking about tapering. So it's a lot of rumors. Nothing meaningful has happened yet. I don't expect nothing meaningful to happen this week. I don't expect nothing meaningful to happen until something disastrous strike. But again, the headlines you'll see, here go another one. Feds to tiptoe toward tapering next week. Okay, so this is what, you know, the market participants are going to be looking at. The Feds to pull back in support from the mortgage-backed securities, from the mortgage markets. We're seeing, you know, bond rates go extremely low. You know, from the bond buying, you guys can see right here, the 30-year fix. Look at this home mortgage rates here that's built into our website. 2.87% 30-year fixed rates. For you guys don't know, rates have been over 3% this whole year. The last time they were this low was, I believe, in January. So just miraculously this month, they just fell, you know, dramatically here, which is crazy. So you got some great rates, but the prices of homes are out of this world still. I got a couple of people that I know that actually have Zillow is buying their homes, which is crazy to me, right? I'm like, what? Zillow is in the game buying people's homes. You know, I got two guys. It was like, man, Zillow approached us to buy our home and they paid over the bid, well over the bid. Yeah, right, I'm selling, right? But again, that cuts out, you know, regular people for trying to buy homes. If Zillow's taking up all the inventory and they're overpaying for it, you know, you can't compete with that. So I just think that's interesting. And another interesting thing is that we got the NBER that came out that says that we're no longer in a recession, right? So they said this is the shortest recession in history. I don't feel like going down through it, but it's here it's in the news feed somewhere. But basically, we're supposed to be out of the recession now, but yet we still have, you know, almost 10 million people out of work. It's just crazy. So when you take, again, looking at those charts here, you know, last time we saw the bond rates went down like that, that was a recession, right? Could we be going into a double dip? It really depends on, you know, how the Feds maneuver this thing, right? A double dip recession back to back quickly. I think that's something that we can see in reality. Okay. But what's interesting is some other things that I haven't considered that I've been learning in real time, just interacting with my clients and people that I know. Okay. So y'all let me know if y'all have seen these things or heard about these things. Let me know in the chat, in the comments below, if you heard this, right? So last night, for instance, I went to the bar and I went to go get me a shot of tequila. The young lady, the bartender, she says that they were out of the house liquor that they have. So they're out of the cheap stuff. And then she was like, well, the Patron, you know, because I, you know, get my Patron pop off. You know, I don't drink often, just every once in a while, have a nice little shot. You got to have a tequila with the pineapple, you feel me? So that's how I get down. So anyway, she was like, it's going to be $15 a shot. I was like, what? I'll tell you, I don't even know what they normally are these days because I don't hang out at bars and stuff, but I couldn't hit the store and get none, so I just went by to go grab, you know, a shot, whatever. And she hooked me on up, so it was nice. But she was like, it's shortages on the liquors. She's like, they can't get the stuff that they normally get. And so they are passing those costs on to consumers, right? So I want to drink some Patron. I got to pay $15 for one shot because they can't get their hands on it. Have y'all seen this or heard this? I don't know. I know some of y'all be up at them bars now. Don't be acting like y'all don't get down. But that was news to me because, again, when I see things like that in reality, in real life, I like to come back to the charts and stocks to see what is happening. All right. But that was last night. I haven't had time, but I was wondering if you guys have heard anything about these liquor shortages. So I think that is really interesting. So anyway, then I have some other clients that are getting ready to retire. They're out in Arizona and they're moving to Colorado. And I was asking them why they're moving, and they said that they're moving because there are droughts. Okay. They got some crazy droughts. They're like, we got to get the hell away from these droughts. It's like, what? I didn't even know there was these droughts. And I just thought that was really interesting because when you talk about droughts and you take a look at the whole world, I'm looking at South Africa, looking at Brazil, looking at all these places. I saw in South Africa, man, they had blocks of people waiting at grocery stores trying to get food. Food shortages, okay? Water shortages. And mind you, if you have a water shortage, you're going to have a food shortage because you need water to grow the food. So I just find all that very, very interesting because we're at a time where we got shortages of everything. It don't matter. The government is paying all kind of handsome benefits. People are not going to work. So producers of the goods and services don't have enough help to produce the things that people want to buy and to consume. And you got to keep in mind, people don't want money. And I teach this to my kids all the time. What do people want? They want what money can buy. Money is just a media of exchange. That's it. We're exchanging something for what we want. You exchange your time so that you can get a paycheck at your job. Then you get that money, you're going to take it and get goods and services, pay your bills and buy some nice things. So you got to keep in mind, the real economy is going to be based off of the production of goods and services. It's not off of Bitcoin going up and down, right? That's speculation. That adds no value to society. It's all about production of goods and services. So you got to produce more if you want a better economy. But when you have people not going to work, but people are now out and consuming, who's making the stuff that we're consuming? You see, And if you can't make it, then you have to import it. Okay. And these are all the things that we're seeing in real life. Yeah, in real life. Mark said, man, they holding that stuff in the back to drive up the prices. If lumber is up, why not juice up everything? I mean, listen, again, I don't know. I'm just telling you what I saw in there. They didn't even have their house liquor, not even the top shelf. They're like, they can't even get the cheap stuff. I just thought it was interesting. I don't know. So you guys got some contacts out there. Give me the juice once y'all get that information. Bring that juice back to me. I want to know, is this real or is she trying to bust me over the head? Y'all let me know. All right. Dustin said he saw Dubai was using drone tech to create rain from their rain droughts. Okay, that's interesting. See, Dustin, I already knew about. I know in the Midwest they have these airplanes, these pilots that they pay to induce the clouds to make rain come out of them. I already knew that was the thing. So farmers that want to compete, they'll pay these guys to induce the clouds with this chemical and make it rain. So that's interesting. I did see some video stuff about them trying to make rain in Dubai for the droughts. And then I saw some crazy flooding over in China where all the cars were underwater. It was just looking like mayhem. So I don't know. I have a very pessimistic outlook of this whole thing. I just pray to God that, we're protected here in America. I mean, it's probably bad to say, oh, don't protect nobody else. But this is what I'm saying. I just don't want us to have to go through none of these things. But if you were to have to go through them, you just need to be prepared. Just taking a look back in history at certain things like Weimar, Germany, hyperinflation. I told you guys the story a million times. What did people do to try to protect themselves from inflation? They went and bought things ahead of time. They stockpile up on it. You don't want to be in a situation where you can't wipe your ass because you don't have tissue. And we saw that happen, when they locked everything down. But I definitely am concerned about food shortages coming here now. So it's one thing to have some toilet paper, shortages, but food is a whole nother thing because people will kill you over food. So anyway, I'll be keeping my eyes out for that, these shortages and stuff like that, because again, even though you have people that's not working, that doesn't mean we won't have inflation, you see, because people are still consuming. So it's still a supply demand situation. When that demand still outplays the amount of supply that's out there, it's still inflationary. So these are some economic debates that's been held by the inflationists and the deflationists, still having those things in real time. Here's a nice article if you guys want to get your nerd thing on. My man Zoltan about the reverse repo market. Again, this stuff is so convoluted. You got people with doctor's degrees that don't even understand this. So when guys put in that research to put out research like this, you definitely want to, take that as a jewel to research. You feel me? Because they're going to make it understandable for you. And if you spend your time in doing it, you probably wouldn't even be able to make out anything logical. Stuff is super convoluted. The markets are super convoluted. But anyway, that's interesting to see what's happening in the repo markets. That could give us some answers to why we're seeing the bonds, people buying bonds when they shouldn't be, which is weird. So anyway, so those are the things keep a lookout for. What else we got on the pipeline here? We went over the debt ceiling. Let's just go over earnings real quick. It's going to be a big dynamite week here. You guys can see the earnings calendar here. Big boy names is up in here, Monday, before the bell and after the bell, you guys can see them, right? Tesla is going to be after the bell. So we might see a nice pump up in the markets ahead of the bell until after the bell. That's when you get, the real work. And they normally hold those big names after you get the real work. So again, you got big names in here like Tesla and Logitech on Monday. On Tuesday, before the bell, you got UPS, 3M, GE, Raytheon, JetBlue, Waste Management, Sherwin-Williams, Corning, big boy names. After the bell, oh yeah, it's going down. Apple, AMD, Microsoft, Google, Visa, Teladoc, Starbucks, everybody and their mom is reporting after Tuesday, after the bell. Then Wednesday, we'll have Boeing ahead of the bell, Shopify, Pfizer, Tilray, McDonald's, Spotify, Bristol Myers, Teva. After the bell, Facebook, Ford, PayPal, Qualcomm, Yum, ServiceNow, Lam, Spirit Airlines, okay? Then Thursday, you got MasterCard ahead of the bell, AstraZeneca, Merck, Yum again. That's interesting. Yum here. That's the other one's Yum China. Okay. And then Thursday afternoon, you have Amazon, Pinterest, Twilio, Skyworks, Gilead, T-Mobile. Okay. So it looks like Wednesday and Thursday is going to have all the juice. But Wednesday and Thursday, I mean, pretty much everything this week is going to have juice, to be honest. Friday, we're going to have Exxon, Caterpillar, P&G, Procter & Gamble, that is, Chevron, AbbVie, Weyerhaeuser, Colgate, for you people that like to brush your teeth with that. Anyway, so it's going to be a pretty action-packed week, actually. The whole week is going to be action-packed. All right, so Monday, Tuesday, Wednesday, Thursday. So after Monday, after the bell, so Tuesday, starting Tuesday, we're going to get a lot of work. I don't know what that work is going to be like, but I imagine Monday is probably going to start out pretty nice. Tuesday, I think things are going to get super dicey. We're going to have to see. You got to remember, the Feds are also going to have their meeting this week also, which concludes on Wednesday, okay? And we have lots of other economic data that's coming out as well. So I think it's going to be an action-packed week. And for those who know like how we traditionally trade, there's not one strategy. It's all kind of ways that you could trade the markets. That's what I love about the market so much, is there's something for everybody. Long-term, short-term, mid-term, swing trade, day trade. There's always something for everybody. Because the markets has been such a rut, without direction, without clarity, most of the trading I've been doing is day trades. I've averaged about 2 days in a trade now. And when we're in the chat room here and we're calling out the plays in the chat room, I don't want anybody to get intimidated when you're seeing us post certain day trades. If you got some long-term trade ideas, I definitely welcome you to continue that. I don't know if you guys actually get the emails. If you're not on the email list, make sure you get the email list. Every week, writing an article or writing an email to you guys. Nice, short, sweet, good information. We cover fundamentals. We cover technicals this past week, fundamental analysis, technical analysis. And so the fundamental analysis situation, I just want to give you guys a nice little jewel here. But when we talk about the fundamental analysis, I'm going to make this quick. You got to understand it's a lot of work that goes into understanding the fundamental analysis. And basically what I was writing to you guys, and shout out to my wife because she edits all of that. She's a phenomenal writer herself. But she's able to ink what I'm saying. And so I love that. But basically understand that with the fundamental analysis, that's what the big boys do. They pay crazy money, hundreds of thousands of dollars a year for equity analysts, bond, and all these analysts. They put together all that work. And it's okay if you learn it too, but most of us don't have the time to be going in and performing financial models, fundamental analysis models and stuff like that. And I have a modeling analyst designation. It takes a lot of hard work, and most people just won't do it. It's too boring. The cool thing is that with the institutional traders and the banks and all of them, they have all the research, right? And so when you talk about the markets, you talk about buy side, sell side. Well, on the buy side, and the sell side, well, what are they selling? Okay, well, they're selling their analysis. Okay, and so the buyers, they're buying it. Okay, that's pretty much what that is. But what we do is you don't actually have to perform the fundamental analysis yourself because the geniuses have already done it for you. So you just piggyback off of the geniuses. And the geniuses, how do you know what they're doing? You see it in the markets, right? So the geniuses, they're over here in the markets moving the prices of things based off of their fundamental analysis. So I don't know if y'all got that from the email. I just want you to make sure you get that. Retail traders were too small to move these stocks, these charts, these candlesticks. That's not us. That's not you and me. That's the big boys. And when they get into positions, they're trying not to move the stock too far off. So they're trying to hide their positions and break them off into itty bitty pieces until they can get into the full position before they move it. Okay. Because if they put the whole order on, the price is going to move and it's going to cost them. They don't want it to cost them. Right. That's why you got market makers. They're in between. And so anyway, not to talk you guys' heads off of that, but just understand that the big boys, they got the fundamental analysis down pat. So once you can uncover what they are building their positions into, you can ride the wave with them using your technical analysis. Let me know if that makes sense. Y'all put a thumbs up in the chat. Let me know if you understand what I just said. If you don't, it's cool. We'll go over more details. But basically, what you need to understand is the geniuses are doing the fundamentals. And we can see what they believe based off of how the stocks are moving. Okay? Ron is the only person that understands this. All right, all of y'all, I need to see all y'all in class. All of y'all, I need all y'all in class, all right? We'll definitely go over that. So anyway, that was the email, just giving you guys that juice in the chat room when we're trading here on a daily basis. You know, I'm telling you guys where the juice is at. We talk about, hey, I'm giving you guys certain plays. I'm like, hey, here's the juice. And what I mean by the juice, this is where the big boys is playing. This is where the money is at, okay? And so we're trying to get in when the big boys is at, you know what I'm saying? And they're building their positions, you know. It takes them time to get in their positions. We can see the playouts in the markets. So that's basically what I wanted to say with that. All right. And I think I pretty much covered most of everything here. Let's go over some charts real quick. We went over gold. We went over Bitcoin. Let's take a look at oil real quick. All right. Take a look at oil real quick. It was interesting, but I remember seeing gas prices was high as hell about a week ago. Yeah, they were high. And then next thing you know, I see them come down this past week. And then, you know, you see all of that in real life. And that's what I think I love about the markets also, because we can always see things in real life. So anyway, we saw oil come down, boom. And remember that Goldman Sachs target that I got in here? That's still there, but pay attention how the price went and snapped back to that target. Boom. And then it popped back up here to 618. So gold is still elevated. I believe that the OPEC came to a decision to output some more oil. You know, they understand. Listen, man, listen, this stuff is so convoluted, it's crazy. You'd be amazed at all the people that's in bed with each other. You know, the history that the Saudis have with America is crazy. Y'all don't even understand. You got to do your homework. But anyway, if the economy is suffering at anything, all they got to do is make a phone call. What's his name? Ben Solomon, whatever his name is. Biden can call him up, say, hey, bro, listen, y'all need to get that oil popping. You feel me? Like, yo, we can't have these prices out here like this, all right? Inflation is kicking our ass right now. You need to get that shit down. And so a good proxy for inflation is oil itself, right? If you just pay attention to oil, that gives you a nice proxy of what's happening with inflation. That's why I was telling you guys when we was, you know, talking about those other game plan Sundays, all the other data was, you know, right intact, but then oil, that just solidified it for me, right? Clearly, you can see oil is going up, inflation is going up. Remember, everything got to get to you. When you buy things, somebody got to bring it to you. The Amazon guy, he got to fill up his truck. You feel me? You buying stuff from China, you buying, well, all this stuff has got to get to you. Somebody's got to burn some oil. When those prices go up, they get passed down. Okay. So the trend is still intact on oil. We may trade a little sideways in here, but the trend is still intact nonetheless. It's got some short-term pullback in there. So we're going to be curious to see what's happening. Again, I believe this whole Delta situation, the week before we saw the travel stocks, they were getting smacked up because of this whole Delta spike thing. And, you know, the markets are anticipating us to go back into a lockdown. Who's that going to hurt, right? It's going to hurt, you know, people that's taking vacations and stuff. I just told you on Yahoo Finance, they had a doctor in there telling people don't go to Florida, you know, and I'm supposed to be going. We'll see. Anyway, they're telling you don't go out there, you know, no traveling. They don't want you traveling and stuff. Who's that's going to hurt? Who is that going to hurt? So you want to get ahead of those moves, you go to the, you know, to the travel stocks. Let me see. Royal Caribbean, right? There you go, right? So let me just move that out the way real quick. You can see that right there in the chart. 200 moving average. Blue cup didn't clear. Blue cup didn't clear. Rejection. Sell trigger. Crossover under the moving average. That's not looking good. You feel me? So the market participants are trying to get ahead of what they believe is going to take place. You, however, we're too small. We don't have teams. We don't have millions of dollars to hire all these analysts, but we can see the big boys, how they moving in here based off of their analyst research. And that's how we use the fundamentals. We piggyback off the big boys. So anyway, that's why it's crazy for these Robinhood people that want to kill the hedge fund traders and all that. No, we swim with the sharks, B. Listen, we don't need to eat the way they eat. They eat big size chunks, and the little debris, we gonna eat the debris. It's gonna fill us up. We little tiny little fish in the sea. You feel me? So anyway, and then Robinhood's supposed to be going doing the IPO thing situation, and they talking about they got so much litigation, so much money, and lawsuits and stuff that they're paying out is ridiculous. But anyway, this does not bode well. Okay, so if this Delta situation really spooks the market, it's going to be hell to pay, and I'll be looking into shorting these stocks, these travel stocks. So anyway, all right, what else we got? Let's take a look at some plays real quick, because I know we're short on time. But the sectors were actually looking pretty good. What I find interesting, setups like, let's see, Home Depot. All right, I'm gonna go back to a daily chart real quick. But yeah, you see, stocks like Home Depot, Lowe's, it's like an inverse head and shoulders. I think we talked about this before. You can see, book up, right? It does that. Home Depot is looking interesting. Lowe's follows that as well. Okay, Lowe's follow that as well. Lowe's in a squeeze. You guys can see that. Got some space there. You can see from that high, right? From that high, boom to that low, and it's like it's trying to come back up. What else we got on the radar? Doordash, interesting. It's up against the 618. So I definitely want to see how it's going to behave up against this resistance zone here. It's in a squeeze though. Got some momentum shifting upwards. And so if this thing breaches to the 618, we could definitely see it go north. And I think about situations like, what if this whole Delta situation does pop off? The way the pandemic is supposed to go down. I mean, people are going to be back ordering food and stuff like that. People are already ordering food and stuff right now, but you have even more people. Who's going to benefit from that? Companies like Doordash, people that don't want to go out eating, restaurants go on lockdown and stuff like that. Who is going to benefit? Doordash, all right? So, I mean, stuff like this, you don't take a genius. We're just, trying to logically deduce what the outcomes could be. We could be right, we could be wrong. You put your money where your mouth is. That's all you do. And never risk more than what you're willing to lose. Okay, I'll tell you another company. Okta, this situation right here. All right, another great stock company here. And every time we look in the past, whenever I got this buy trigger, what happened? Boom, stock went up. Buy trigger right here, boom, stock went up. Buy trigger right here, boom, stock went up. Guess what I got right now? I got another buy trigger. So logically, that's what I'm doing. Buy here, squeeze is right there too. So if this squeeze blow through, we definitely can get, at least another test of the 786 right here. But again, that squeeze may push that bad boy beyond its previous high of 294. So Okta, I like this one. Okta, excuse me. Let's see, another one. And again, all I did is I went through the strongest sectors that we had, and I just picked out the big boy names that's in those sectors, like what was moving, what's driving the markets right now, what's looking good, what's looking bad. So those sectors that they're in, the consumer discretionary sectors, the technology sector, what's moving in those sectors, right? So I got the big boy picture. Then we take a look at these names that's moving in here. You got a squeeze that's on this bad boy. You got a buy trigger there as well. We got a recent new high. We do have earnings coming up this week. But again, can we get some money off of this week? Yeah, definitely. This looks good. And I'll give you guys, I guess, one more. All right, Twilio, another squeeze situation. All right. So these are a couple of names that I like. These are more along the lines of those swing trades. So I know you guys get a little intimidated by the day trades or stuff like that, but these are some good swing ideas. Let's see what y'all got. Dustin Financials, man. Dustin always try to hit me with the tough ones. That's what I'm talking about. Y'all know how I feel about these financials. Financials is not my strength, but let's take a look at it. Financials is a very interesting situation because all the manipulation and my economic views can cloud me on this because, again, the markets will somehow make a liar out of you. Okay. Not too sure what's happening here. But I, in general, would like to be more pessimistic on these financials. We will have to see. But if you take a look at it, just break the chart down for what it is. We got this 100 moving average. That's a strong support zone there. And we got the stocks that came down and it bounced off of this level here, came back about to the 618, and then it bounced off that 100 moving average. And it's coming back, it's clearing, okay? And we can see it's coming down like this, okay? So it's still down. My question is, I think that it may continue to contract into this, like a more of a squeeze type situation before it breaks, but I don't know. You can have a situation like what could happen with the Feds this week, that you can get a knife on this bad boy, but I don't know, you know. I'm staying away from it though. The financials have been doing good, but because I just have no clarity here, I'm just staying away from them. You feel me? Made that lower low, but the rest of the setup looks bullish. Not sure about it. Yeah, that's why I'm saying, like, man, when I look at the chart, if it take me too much thinking, I just shift to the next one. I'm like, yo, I'm not gonna force a move out of this thing. Once the move is clear as day, then I'm getting into it. But I'm not gonna try to imagine it like, oh, I can do this. I need more clarity on this. It's in the squeeze. It's a little overbought down here. But I have no certainty on this one. So good question, though. Appreciate the tough, hard, good one. But again, I have no direction on that. So for that reason, if anything, do an iron condor or some kind of spread, something where you can catch some sideways movement on it. But I wouldn't be doing anything directional because I have no clarity on that. Next one is ILMN. Okay. So this is a bullish chart. The previous high here, down to the low here. We see it got caught up in that range and it's making its way out. It's making its way out. It's got a squeeze in there. Yeah, I like this to the north side. I think you can hit that 6, 7, 8, 6, can get up to around that 786 level, maybe before earnings. So I do like that one. And earnings is up on with the first week of August, the 5th. So you got enough time in this situation here. Bullish overall, I like that. Costco. Yeah, Costco is still going to the moon out here. So just got those new highs. It is extended. Can it continue in this extension? Yes, it can. I got levels of about 440 off of this. But it's too high for me to look at this as an entrance, because normally when we get to these levels here, these are profit taking zones. Okay. So should have been in this move back here. When we got that buy trigger, we had that squeeze in here and then the fire off, and it would have drifted all the way into that sell zone. And so you should get some selling going on in that zone. Got a little bit selling right here, not enough. But it looks like they're still pumping it. So if anything, if it goes higher, you can get around 440. If anything, if I see any flow throughout the day, I would definitely take it on some kind of day trading positions. But for the swings, it's already extended. So for that reason, I don't like it for that. Made it low, the rest. Okay, TSM. All right. Taiwan Semiconductors. Yeah, the semis, they are tripping over here. Okay. Super sideways in here. That would have been great play for butterflies, iron condors. It's still moving sideways. And if you take a look at that 200 moving average, it's catching up to this bad boy. I wouldn't be surprised if we get an eclipse and this thing come down. But I don't know. You know, I don't like the chart. I don't see any setups on this thing right now. And so still a little premature. I don't want no parts of it. These semiconductors are, you know, interesting. I do think that tech is still going to go a little higher, but I don't think that the semiconductors are going to do it for us, though, right? In fact, let's actually take a look at. I didn't even cover the Nasdaq. Let's take a look at it real quick. All right, there you go on the Nasdaq. Okay, just got those new highs up in here. Let me see if I can get some levels real quick. Yeah, still not much space on this one. I'm just taking these previous swings on this bad boy. So again, we took this swing up. We got that level. We took this swing up. We got this level here. Now I'm just taking this swing here, and we're already at this level here. I mean, could we drift higher? Yeah, we can. We do have some trend that's coming up. Squeeze that's up in here, but we are a little elevated. So, I think we can get higher, but I don't think we'll get that much higher. If I take a look at the chart itself, 15,500, that could be around like where I think that it can go. Definitely will welcome a pullback. Yes, Ron, definitely will welcome a pullback. I don't know if we're going to get that pullback just yet, but you know what is interesting that looked like I think we're getting a pullback on is the S&P. So let's take a look at that. All right, so there you go. You got those levels up there. And early this year, we plotted out JP Morgan's $4,400 target. And look how last week it hit that perfectly. Come on now. That's what I'm saying. You let the smart guys do what they do. We piggyback off of their research analysis. They got the geniuses. We let the geniuses do what they do, but we can see how they're moving. This target has been on this chart for the whole damn year. You guys know it. And look at that. We're right there. So this is interesting because when we hit a target like this, I think we can be topping off like, okay, because if that's JP Morgan's target, then they should be offloading their position. You got to understand, they've been building a position probably way back. I can't even remember. Probably back here, somewhere around there, right? And so they've been in this position the whole time building. Boom. And they hit their target, they should be exiting. So we'll see. I'm not sure. It's a squeeze on this thing. It's looking really interesting, but I wouldn't be surprised if we start to top off. We may take out this high here from, this week, but we're definitely in an interesting position. If I can get some other levels on this though, let me see. Okay. So it looks like we could get, around 4,500. We could get through 4,500. If we do get to 4,500, I think that we'll get a nice pullback though. So I don't know if the pullback is now or not. It's hard to time these things, but a pullback is going to come. All right. Anything else anybody else want to see? Because I know we're right here at time. So we go ahead and bring this bad boy to a close. Anybody else want to check out? Again, make sure you check out the website, Wallstreet Jackboyz. Check out the chat room. We in here all day. Friday, I came in a little late. I did have some major exams I had to knock out. But every day, somebody's in here. I want to shout you guys out. It's in here every day. My man, Ron, Chris, Terry, Jonathan, Mark, like all y'all in there just every day. Listen, just stop by, poke your head in there, every once in a while, see if you can find a play. This plays all day that's coming in here. It's super dope. So make sure y'all check us out. All right. With that being said, we'll go ahead and bring the session to a close, man. I appreciate it. Y'all have a great weekend, and we'll see you in the market tomorrow. Peace.